All right, all right, all right. Hey there, everybody. Christopher Inks with Texas West Capital coming at you live just a few minutes after 11 a.m. Central Standard Time here on, what is this, Friday, the 24th of March, 2023. It's a kind of rainy, overcast day here on the lake. How are you all doing? Hopefully everybody's doing all right. Hears me and can hear me. Well, boy, I'm just having a day. I'll tell you what. Was up early this morning. Excuse me, so that I could do the Investing Bros show. That was a lot of fun. Had some technical stuff we had to work through, but still a good time. Man, hopefully you guys are doing all right. We got a lot of stuff going on lately. Things just continue being kind of crazy. We've got, what do we got? Well, we've got the dollar kind of pushing up a bit here. We've got banking still just kind of dying, basically. We got Yellen back and forth on what she's saying. Yes, we're going to provide support. No, we're not going to provide support. Yes, we're going to provide support. We've got the SEC doing their thing. I don't know. It seems to me like Gary Gensler just got this. I don't know, man. It seems to me like he's just got this, I'm all powerful kind of thing. Let's not give anybody any guidance, but let's go ahead and go after everybody and their grandmother. And now he's got his sights set on this Coinbase. But again, there's this whole issue about statute of limitations, guys. I'm not going to go a lot into it here. There was a thread that was really well written that I posted to Twitter there that you guys can check out about that. But crimes generally have statutes of limitations from times that you can do them, right? Laws, and it could potentially be argued that because the SEC has allowed Coinbase to continue all this time beyond the statute of limitations, that they don't really have much to say. But we'll see how it goes on all that. We've got everybody also running into money markets, it seems now. So going out of banks, jumping into money markets. I think it was like $120 billion inflow last week, but about $101 billion of that was institutional, almost $20 billion from retail. But people kind of getting out of the banks and putting money markets. The problem with that, though, is that money markets tend to invest in shorter term, 90-day kind of things, but also in commercial real estate. And we know that commercial real estate is really potentially about to look really bad on banks' books, right? Because we had the pandemic, everybody left. We're coming back, but the whole way we work, there's a lot of people that aren't going back to the office anymore, right? So a lot of these commercial buildings are, kind of sitting there vacant or nearly so. They've got a lot of times they have much shorter term rates on them. So, if they're looking at interest rates today, all of a sudden we're up there, 6% and whatnot versus what we were just a few years back at almost zero. And so I think there's probably going to be a lot of defaults on that. So there's a lot of issues going on that. But the problem with the money market funds is that they're not insured, right? They're not FDIC insured. So, man, wouldn't that be something? You get out of the banks because you're scared. You jump into money markets, and then the money market can't redeem everybody that's requesting their money back out of it because their bets that they made on commercial real estate aren't panning out, and then you lose your man. It's a terrible thought, right? So anyway, yeah, craziness going on there. Who's here today? We can talk about all this, and we'll look at some charts and whatnot as well. Hey there, Eric Quinn, Data, Hank, Brian Riley. See you guys. Bamboo, what's going on, man? Andrew Bennett is here. BR checking up. Chad says, what up, y'all, in my best Texan drawl. What's going on, man? Good to see you guys checking in. I know we got a lot of people that kind of sit out there and just listen, so that's all right as well. But chatting, of course, and questions are always welcome. Don't forget, guys, you can visit us here at howtotradetowin.com. We've got, different levels of services that we offer. The big thing is our mentorship program. It's a year long. But that goes beyond anything that you get from anybody anywhere, because we start working on your emotional challenges, which is the biggest thing. You guys can go out there. You're not stupid people. You can go out there and you can learn how to trade, right? You can follow rules and do this thing right. The problem is, I mean, you can read it and understand it and know what to do. The problem is following through. It's emotional and a psychological issue. And that is the biggest problem that we have. I always say, trading is simple. It's not easy. It's simple because it's just basically movements between pockets of liquidity. But it's not easy because you have to deal with your own, everything's going on in your head, your emotions, everything else. And if you don't know how you're doing it or how to do it or whatnot, it doesn't matter how good you know the actual system because you won't apply it as you should. So we spent a lot of time doing that. Of course, my own system, stuff going on in there. There's a whole bunch of stuff. You guys can go over here and check it out. We'd love to have you in there with us. Let me see here. CME Fed Watch, man. So here we are. You guys have to forgive me. I have a little bit of allergies today. I don't mean to keep rubbing my nose here. I don't want to sneeze really loud here. I'm trying not to. But yeah, so as you can see here, the CME Fed Watch tool, this is basically the market's betting on what the target rate probabilities are, right? So remember, we don't have another meeting until May now, okay? So May 3rd is the next meeting date. And so what happened this last time? We got 25 basis points, as I've been expecting, so no surprise there. Now, in the presser, Jerome Powell decided he wanted to sound really, really hawkish, right? And what I mean by that, well, I mean that the market was expecting, a lower terminal rate, potentially reversal by, December. And, Powell came out there and said, no, I don't think so. He said, nope. We're going to, keep on potentially hiking here. We've got a higher terminal rate we're looking at. But again, guys, I want to point out, when has the Fed actually done ultimately what it said it was going to do, right? I think it's been pretty rare in my experience. So again, here's what we're looking at, right? So the market is betting on an 88% chance right now. I mean, we've still got a while, guys. It's only the 24th of March. We still got until May 3rd till this actually comes to fruition, right? But right now, they're looking at 88% that chance that we stay flat at the next meeting. We stay flat at the next meeting. Just barely a 12% chance that we get 25 basis points. Now, will this play out? We'll find out. But the market, I think the market feels like either Powell is bluffing or they feel like he's out of touch. The market is saying, no, you're an idiot, basically, with this. So we'll see how this all turns out. But right now, again, looking at flat, if you were to ask me, I don't know. Right now, I'm flat to 25. I think flat would be better. Even if they're going to hike again, I think you do flat the next time and then 25 the time after. A lot of what's going to tell how they're going to do this is, does the banking sector stabilize? Does money market stuff continue to rally up? $5.1 trillion in money market funds right now, guys. $5.1 trillion. And that could be dangerous. We'll talk about that here in a minute as well. So, we'll see what happens. Right now, I think probably flat at the next one. I think even, like I said, I think even if they're going to raise it, I think you go flat this next time and then 25 basis point the time after. And then I think you're potentially flat and then reversing after that. But we'll again see how everything goes over the next month or so. Hank says they've mostly been wrong in their long-term bets. He's talking about the market, but we don't care about the long-term bets. We care about the current ones, right? Because long-term, there's too many things playing out long-term, right? The Fed continually is wrong about their long-term, right? So, I mean, you can't sit there and go, oh, well, the market's a bunch of idiots because they're wrong long-term. The Fed's wrong long-term often, all the time, right? The Fed doesn't even follow through with what it says long-term, right? So, yeah. Frank, what's going on? Dominic, good to see you. Andrew checking in. Andrew and is that Andre there? Good to see you guys. Yeah, Hank, I know what you mean with their rate prediction. You're talking about longer term. I get it. But again, the Fed is often wrong in their long-term predictions as well. Longer term is more difficult. It's more difficult because there's moving parts, right? Right now, you have this whole banking thing going on. How are you going to know what you're going to do a year from now? if you don't even know that the banking is even stabilizing right now, right? So we're most interested in what's going on at the most recent meeting coming up. I mean, I think it's the way you play it right now. There's too much other stuff going on, too many moving parts to be really confident about anything long term. So yeah, let me see here. It's not 2 months out. It's a month and a week out, basically. Right? It's the 21st. It's the 24th of March. It's the 3rd of May. About a month and a week. Month and 10 days, maybe. But like I said at the beginning here already, we'll see how things go as we get closer to it. For now, this is where they're at. Again, a lot of this on here is going to be dependent on how, I think a lot of it's going to be dependent on how this whole banking thing goes. And if anything else lights up from that. Yeah. Yeah. But definitely, I mean, it's like everything else, guys. Even in the charts, you got the longer term charts. People on Monday are saying, oh my God, the weekly looks like this or that. Well, you're on Monday, guys. You got the rest of the week to go. Don't be getting all excited. Or, the first hour of the daily, everybody's like, oh my God, it looks like this. Well, you still got almost your entire daily left before the candle closes. It's the same thing with stuff like this, guys. And again, that extends out to the longer term, right? You look at your shorter term and don't give so much thought of, to what people are saying about that much, much longer term. Too many things could happen there, right? So anyway, let me see here. What do we got here? I thought I saw something there. Oh, Andrew's mentioning another bank in trouble with Deutsche Bank. We'll see, right? We'll see. You're going to see probably more of this stuff. I told you, last couple of weeks, I said, we're not done with this whole banking thing yet. We got to see how far this pushes out and does it really catch? It's not really catching yet. But, again, what's going on now is different than what happened in 2008. Right? Everybody's all worried about 2008. 2008 was a solvency issue. Right now, really, it's a confidence issue. It's just, why are the banks having trouble? Well, because people aren't confident in them, so they're making a run on them. They're asking for a lot of money back in a shorter period of time. But now, the bank's got its own bank term program there that people seem to think is a QE. It's not. They're taking on liabilities, right, which are assets for the Fed, they're expensive. The banks are going to pay back, a lot extra on those yearly loans, but they're getting money at par value on the at the face value of the bonds, not what the market's pricing them in at. So I mean, there's your trade off there, right? Higher or lower crypto. What's up, May? Says if it happens, let me see here. What'd you say there? If it happens to 50 banks, it's done. It's all based off. Yeah, I mean, that's the thing, and you get all these things out here. Oh, all these banks are insolvent. Well, yeah. I mean, what do you think? What do you think fractional reserve banking is, right? You can look at the total amount of dollars available in the world and how much debt is actually out there. The debt dwarfs the amount of dollars. There are not enough dollars in existence to pay off the debt, right? I mean, this is just the way things are, guys. But as long as you continue to believe in the system, it continues to go on, right? If you stop believing in it, well, that's going to cause a lot of issues for everybody. So, I might suggest, hey, it's in your best interest if you keep believing it, right? Because there's just such a lot of nastiness that can happen, right? So we'll see what happens. Again, back in 2008, everybody was concerned about hyperinflation and whatever, blah, blah, blah. We know that didn't happen, right? We know we had a decade plus of really just the Fed almost impossible to get even to their 2% inflation. And we dipped down 2015, 16, and then 2019 into deflation for a short bit. After all the money printed there, right? QE 2008 is different from QE 2020. All right? It's the way in which the money's going out, where it's going, and where it is, right? Now, could what's going on now become something more? We'll see. But right now, it's not QE like you think of 2020. It's QE like you should have been thinking of 2008. Hopefully that makes sense. Okay, guys? So, that's what we're kind of looking on there. Let me see here. Janet Yellen. Oh man, oh man. You guys saw that, right? So she was man. So she's been like, okay, we're not gonna do, we're not gonna jump in and protect anybody. And then the very next day, she's talking to Congress, and she's like, okay, yes, 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 we're ready to step in if we have to. It's back and forth across here. I mean, how do you expect markets to stabilize, right? How do you expect to have confidence if you can't even keep it straight for a day, right? I mean, I'd have a lot more respect for her if she said one or the other and at least stuck to it. But this flip flop and day to day stuff, like it says here, on Thursday, she testified to a House panel that the Treasury Department would be prepared to take additional actions to stabilize banks, including federal emergency measures taken last week to rescue depositors at SVB and Signature Bank. But her remarks were a departure from the comments she made just a day earlier when she told senators that her department was not considering any plans to insure all bank deposits without approval from Congress. So which one is it? So people are reading this, as they say here, to believe that the fact that she felt that she had to correct the previous comments makes it sound like she's really worried about something. So this DePore guy here is not the only person thinking that. That seems to be the big thing that's kind of bouncing around everywhere. Everybody's kind of thinking, right? He's who is this? Ross Gerber from the investment management firm Gerber Kawasaki agreed, tweeting, Yellen trying to soothe markets didn't really work. I don't think people have any faith in Yellen and Powell at this point. Well, no kidding, right? What a cluster. Well, okay, I won't say that. I'll be nice. In case kids actually, tune into this boring program, right? Talking about markets and macro and stuff. Most adults think it's boring. But anyway. But yeah, I mean, I think it's been a while since anybody's really had any faith in him, right? What's going on, Mark? Good to see you there. But let's see here. So, banks still having an issue here and whatnot. The whole banking sector there. We have a question here. We had this article by CoinDesk. Is this finally an atomic bomb from the SEC? Hank says sometimes people read way too much into a simple mistaken statement. Not even a mistake, multi-interpretable. I don't know. She pretty much clearly said we aren't going to do it, right? I mean, she's got to be careful with her words. They carry a lot of weight, at least in the public's ear, right? Everybody's going to hear them. The more a public figure you are, the more you have to be, really careful with your words. Choose the right words. So I don't know. We'll see. U.S. Securities Exchange Commission there, SEB, of course, sent the Wells notice to Coinbase, right? They said, hey, we're coming for you, boys. Yeah, it's funny. I keep jumping back to Hank here. He says she's not the world's greatest debater. And I happen to think that Jerome Powell actually has a lot more poise when he speaks, even when he's being questioned and whatnot. So it's interesting, right? Words are hard, definitely. But anyway, so Coinbase got the Wells notice. I think you all have heard about this, right? And Coinbase said, what the, right? They're like, seriously, man, come on. Because here's the thing. Coinbase has been in business since what? 2012, 14, somewhere right around there. They've been in business a long time. They've been doing this a long time. So again, we revert back to the idea of the statute of limitations, and I think that may play some into it. But the SEC knows this, or they better, and so they'll probably attack it from another angle, which is also mentioned in that thread. I don't want to go over it right now. It's a lot of stuff, but just laws. When you break a law, there tends to be a statute of limitation that unless something like murder or something like that, where the government or the agency has only so long to actually charge you with a crime, right? Or whatever they want to do, charge you with breaking the law. And so once it's gone bond, basically the ideal, response would be, well, listen, you knew we were doing this. You let us continue to do this. You're basically telling us it's okay to do it. And you need that with law, because otherwise agencies become gotcha agencies, right? They just sit, they're kind of like here in the US, they're kind of like the cops that sit behind the billboard or back off the road a bit so you can't see them behind the building, right? They're just waiting for you to speed. They're not trying to deter you from speeding. They're waiting for you to speed so they can get you. And that's kind of what these agencies, if they didn't have these statute of limitations, stuff like that, would actually be. But I think even right now with them going on, I don't know. It seems like that's, again, going back to what I said earlier about Gensler, it seems like that's what they're trying to do. They're trying to be a gotcha. They're trying to, Coinbase keeps going to them and says, listen, tell us what we need to know. You're saying we may have some securities violation. Okay, which ones? Tell us so we can do something about it. SEC says, no, we ain't going to tell you. We'll see you in court. I mean, it's like the dumbest play ever. So, we'll see. We'll see how that all works. Hank says, what'd you say there, Hank? I find it understandable that the SEC wants to force a decision whether ability to stake a coin makes it an asset, and staking rewards could be considered a dividend. What do you mean you find it understandable that they want to force a decision? What do you mean? No, that's not their job. That is not why they're there. They're there to say, okay, yes, you're breaking the law or you're not. And then if whoever they're charging with that decides to take that, loses that case there in front of the agency, right, can take it higher. The agency is not supposed to sit there and go, oh, well, we're going to let the court decide. We're going to go ahead and charge you with let the court decide. That isn't their job to do it that way. That's the problem. They are supposed to provide clarity. They should have a position that says this is because of this. When a company asks them, listen, help us understand what you're doing here, and they say no, they ignore them. No, we're not going to. And then they come and charge them. That's stupid. That's absolutely stupid. It's not for the judge to decide. It's only for the judge to decide if it gets to that point. The agency, see, this is U.S. law. This is U.S. constitutional law. The Constitution gives the government the ability to create agencies that have the same effect as law. Because the idea is that Congress and whatnot doesn't have the deep level of knowledge they need to have in these specific areas. So you create agencies that look over these areas that are supposed to have this deep understanding. And they're supposed to give the guidance. It is not for them to take you to court so that they can win maybe, and then you can take it higher. That isn't the way that's supposed to be. That isn't what they're there for. Their reason for being is to create guidance, and then to create laws when you don't follow through with that guidance, right? That's what they're supposed to do. If they do it incorrectly, or somebody that they're charging believes they're doing it incorrectly, then they can take them up to a higher court. But the goal isn't for them to take them to some higher court to begin with. Yeah. So that's the way it is. But that's the way it should be right there. You have to take a position, but you can't just go out there and say, oh, this is it, without giving them guidance and saying this is what. You're putting way too much on the courts, Hank. This isn't how it works, man. Let me see here. Mark says, I'm confused now. Who would be the one to make the line? Is the SEC supposed to define it if it is or isn't, or legal judge system does? I'm not legally versed. No, the SEC as an agency here in the U.S. has their, whatever they determine, whatever rules and laws they set out, have the effect of any other laws that are passed, the same level of effect. That's why they're there. That is exactly why they're there. So, yeah, that's why they're there. But, again, to attack a company and say, oh, well, we don't know what it is, so we're just going to charge you anyway. It's the dumbest thing ever. That's the dumbest way ever. Go in there, give them a reason. Say this is why, this is this. But they haven't. That's the whole issue. So anyway, yes, Mark. So the SEC says this is what it is or isn't. That's because that's what they do. And then, they'll bring them in and say, okay, we're going to charge you with this. They go to court, blah, blah, blah. And if let's say Coinbase in this count, loses, then Coinbase can escalate it up. They can send it to a higher court. And if that higher court accepts that, then the higher court will rule and can either overrule the previous decision or rule in favor. If they overrule the previous decision, then the SEC, if they're still feeling themselves, can go ahead and push it up to a higher court, which again can choose to accept or to reject it. And then they can then choose yes or no. And that's just kind of how the U.S. system works. But we're talking probably years to get this figured out, right? Oh, that's a crazy thing. So this is how we're looking at here. So anyway, so Coinbase does get that. Of course, Coinbase has so far signaled that it intends to take the SEC to court. Of course, it's what you can do. People do this with the IRS all the time. People still trying to claim that they're sovereign citizens, and so the government doesn't have the right to tax them, blah, blah, blah. Though that's been already decided in court. And if that is ever your thing that you want to do, guys, just understand, I don't think you're going to find a lawyer willing to take you. It's already been decided in court. You're not a sovereign person, right? You have to do what the government says, basically. But you can find other reasons, maybe for some tax ruling that's against you that you can take it to court. IRS is funny because IRS has two courts, right? You have the IRS tax court, which is basically pro-taxpayer, or you can take it to a district court. Most of the time, I mean, just the court cases I looked at in law school and going through all that, man, I don't know. Most of the time, depending on what your situation is, I think we're all better off just taking it to the tax court. Funny thing is, if you go to the tax court, of course, and do that, and then they find in your favor, it doesn't mean that the IRS can't pursue the same thing against somebody else. It just means they lost that one particular case. So pretty crazy, right? What's going on, Deadly? Good to see you checking in, man. So Coinbase now potentially going to go there. It says, for its part, the SEC's notice was short on information about just how the company is in violation. Girl indicated the complaint is focused on an undefined portion of our listed digital assets, our staking service, Coinbase Earn, Coinbase Prime, and Coinbase Wallet. And then, of course, the SEC spokesman declined to comment. The SEC signed off when Coinbase became a public company with the same business model in 2021. But since then, the agency's lawyers have been building a case against them. That's kind of interesting as well, right? Same business. They said, okay, you can go ahead, public company, it's fine, go ahead and do it. And then they're over here saying, oh, wait, no. We decided now that no, you can't, right? And then the regulators also pursued crypto staking as another category of unregistered securities, possibly leaving Coinbase vulnerable to that front too, of course. So we've got that coming up, right? Again, not the way that you should be running it as an agency. Creates a lot of distrust and a lot of harm in the economy, right? Companies aren't here trying to break the law. If they're doing something a little new and novel, give them guidance, help them understand. That's much more beneficial, I think, in the long term, right? Bank of America analyst, okay? Again, talking about what I was talking about with the money market funds, right? They said they're now the new hot asset. They point out that assets under management for money market funds now exceed 5.1 trillion, which is up over 300 billion over the past 4 weeks. Guess what? Around the time the banking stuff went on, right? They also counted the biggest weekly inflows to cash since March 2020, the biggest 6-week inflow to Treasury ever, and the largest weekly outflow from investment-grade bonds since October of 2022. Interestingly, the last 2 times money market fund assets surged was in 2008. Y'all know what happened then, right? And 2020. You know what happened then, right? So the Federal Reserve slashed interest rates. So he says, Harnet's fond on saying the markets stop panicking when central banks start panicking. Again, same thing I've talked to you guys about time and time again. So we'll see. Potentially a new low coming in for stocks, right? Potentially. Now, the decline does still look like 3 waves, and we'll take a look at that chart here in a minute as well. But, we can talk about it. Again, I've talked about it before. It could be a, WXY type correction potentially there, right? But again, as it says here, there's one difference this time in that inflation is a reality and that labor markets, not just in the U.S., but in other industrialized nations, remains exceptionally strong. So kind of interesting way to come out with that, right? So the other 2 times that wasn't going on, right? Now, here it is. So is this time different? We'll see here, right? But again, when everybody goes to cash, we talk about this, right? Markets tend to punish those who go who are too one-sided, right? And if you get this huge influx running into cash, you know, money market funds, same thing basically, right? More or less. Um, are they doing it at the end here? Because, again, we're talking about the potential of the interest rates maybe being done, rate hikes may be done, maybe being nearly done, potentially a reversal by the end of the year. I mean, again, it wouldn't surprise me that everybody and their grandmother is wrong here going in last time, right? So it should be kind of interesting, right? Let me see here. So we've got that going on now. What else do we have here? We've got an argument that the Fed is done raising rates because policymakers can't measure how much of the bank crisis is tightening conditions, investment manager says. Again, same thing I've been talking to you guys about lately, last few months, is this idea that maybe we're just now starting to feel the effects of the first rate hike back in June. And we had four very large rate hikes, right? 75 basis points, 4 times in a row. And so, again, even Jerome Powell, we've talked about it before, where he's mentioned, listen, we've got to keep an open mind here because, we really haven't even really started feeling those effects yet. We don't want to do it too hard. I think they've already done it too hard there, right? But man, oh man. So that's what they're talking about here. Let me see here. This is KKM Financial CEO Jeff Kilberg. He said, as credit crunch mounts in the banking world, the Fed is unlikely to raise rates from here on out. It first needs to take a moment to see to what degree turmoil in the banking sector will hit lending, which is a natural form of tightening. Exactly, right? By the way, if you listen to Powell recently, basically it seems like he wants to let the banks do the job, do the tightening, right? So if you look at the bank term funding program they're doing and the interest rate hikes that are going on, and then banks will be less likely to loan out, that's exactly what Kilberg is saying here. So the banks then are kind of pulling back on that loan, right? On loaning out that money. And if they're not loaning out money, then there's less money to go buy things. So, again, if the price of things is being driven up because there's too many dollars chasing after too many limited products, then not printing out any more dollars, not giving out any more loans, stuff like that, means there's not more money floating around the system going after those same things. So if you believe that prices are up because of an excess of dollars in the market more recently, the last few years, well, then there you go, which is what Powell's trying to say. Now, again, I don't necessarily believe that's the case, at least not fully, but, anything that gets Powell to stop raising rates, I think will be a good thing, right? I think Hank can agree with that. Let me see here. Again, unanimous vote for quarter point interest rate rise this past week. Why unanimous? I think they had to show this united front thing, right? Because you're trying to shore up confidence in the banking sector. And so if you've got some, FOMC members kind of say, no, we need to be flat. We need to be 50%, reduction, 25, basis point reduction, stuff like that. I mean, that doesn't look very good, right? It says that, well, some of the board members are really, really worried. So, I mean, if everybody jumps in there and says, listen, we're all on the united front, they're all singing Kumbaya, arms locked together, that's supposed to show, okay, well, as a whole, they are not really worried about the banking stuff. They believe they've taken care of the issue. And so now they just have to weather it until people believe it. But you get the modest little quarter point hike. And of course, in the presser talk about, potentially, continuing on into 2025. But, even with that, guys, it's not like Powell said, oh, we're going to raise another 1 or 2 100 basis points. He said, probably, we may be. I know, not probably, maybe, right? He changed some of the language in there, may and some, right? So kind of hinting at leaving things more open. Said, maybe nearing an end to future increases. But yeah, so I mean, a lot of stuff coming in there. Markets have been digesting that the last few days as they do that. So again, that's kind of where we're at. Again, I've been telling you, I don't think the Fed, needs to keep raising. I think they might be stubborn enough to do it once more with a quarter basis point, 25 basis points, but I really think they never should have done like they did anyway. But I think even Hank pointed out, before they were too low to begin with. Running into it, you were almost at 0%. So yeah. So anyway, so that's what we got going on there, right? What's going on with Bitcoin here, guys? What's going on with Bitcoin? Let me see here. What does Eric Quinn say here real quick? He says, hey, good morning, Mr. Johnson. Good to see you there. I think I saw Bamboo up there as well, and Deadly as well. Eric Quinn's saying bonds are showing significant weakness if the Fed pauses in May, I would think they would stay flat until Q4 and then begin cutting. But for those 4 to 6 months after the pause, investors will go risk on and cause the markets to breach all-time highs. Plus, it's not going to show us the whole comment there. He says, plus, the Fed is going to inject $2 trillion into the economy. Just my thoughts. $2 trillion from what? What do you think they're doing $2 trillion from? Are you looking at bank losses, banks insolvency issues or whatever? Anyway, yeah, let me know, man, about that. But yeah, I mean, again, I think, I think if they're going to raise, I think you go flat next time and then maybe 25 basis points next time, but then you're flat, after that. But I don't know. I think Q4 is end of Q3, beginning of Q4. We'll look at that again as a probably a potential reversal, maybe 25 basis point, reduction. Again, I think the Fed is always well overstating what they intend to do. The response everybody gives me is, "Oh, well, the Fed was really serious. They intend to do this." Well, they always intend to do it, but they never do, right? Not to the extent they say. What's up, you? $2 trillion from the printer. I have no clue what you mean there. I was asking printing $2 trillion for what, not from where. Eric, when you were thinking maybe QE. Yeah, I mean, I think there's potentially a chance we get some QE coming in here. But it really kind of depends on how everything's happens up over here over the next few months. Right now, I think rates are what we're looking at, and again, my thoughts are what they are as far as potential raise. Now, I wouldn't be surprised to not see the Fed hike anymore. But based on what they said, I think they might, if they can finagle it, if they can do it enough, I think they'd probably will trying to raise at least 25 more basis points before the market's just like stop already, dude. Right? Okay, so let's see here. Hank says that's because all the balance sheet experts on Twitter have been saying that the increase of the Fed's assets means they have been printing money. They're a bit dumb, Hank says. I'm not going to say all that, but yeah, again, guys, what the Fed is doing is loaning money to the banks, which the banks are keeping in the banks, right? And they're having to pay a significant interest on that. It's a loan. So for the Fed, it's an asset, right? Because they're getting paid back to them, right? So for the Fed, it's an asset. It's not just liability. It's not just printing money out there, or not liability, but it's not just throwing money out there to all of y'all here in the U.S. anyway, right? So what are we looking at here with Bitcoin, right? So again, I think the best thing that we've seen, everybody's all upset about the noise, right? The local stuff. But right now we had the impulsive breakout, large candle spread, large volume through the weekly pivot. Look what we did, guys. We pulled back, retested that pivot just about perfectly. Kind of doing this doji here, right? As long as that's holding this support, again, I'm looking up here, minimum R1. Minimum R1 pivot area, mid-30s, upper 30s, minimum. Potentially could see it run into 45,000 before we get the pullback, right? Before we get the pullback. But again, when you're trading pivots and you're getting something impulsive like this, and especially when you come back and test that support, if we can grab that on the weekly, that's going to look really good. If we jump here at the monthly, excuse me, look at that. So at the end of last month, I talked about the idea of the, when you've got two green months in a row coming off the swing low, it usually indicates that the low is in, right? And a lot of people going, oh no, I don't know, it's a little doji, no, whatever. But here we are, right? Now again, we still have another 7 days left in the month, so anything can happen, right? But we would need to drop down. The monthly open was right there at about 23 144 and 37 cents here on Coinbase. We'd have to close below that to get a negative month, right? So we'll see what happens over the next 5 days, 7 days, well, the next 5 days too. But again, right now it's looking pretty good to me. Let's see here, daily. Again, we've just pulled back up off overbought here, the top of overbought on Stochh RSI, but as you've seen many times before, it can stay overbought for quite a long time, right? Weeks. Excuse me, on the daily here. And so, here we are, right? So you had this not quite a doji, not quite a, whatever they call that, Darth Maul candle here, right? It's got a bit larger body there, but it's got a decent wick at the top and the bottom. And then you have this basically an outside bar printing right here after it yesterday. And then today's candle here, again, pulled down where previous support resistance is right here. That's all we did. And now we're trying to rally back up. Hank's favorite time frame, 12 hour. Again, we are sideways for basically this entire week, sideways between the pivot and the R1 pivot here on those on those hourly pivots, almost exactly halfway there. As we continue to jump on in here, 4 hour is looking like that. Does the 1 hour pull back? Let me see here. 1 hour wants to pull back here. You've got this bit of a pin bar here, a doji looking candle. I've got this right now. If wave 2 was done on this pullback here at the weekly pivot, right? So again, my initial count here until proven, until it breaks down more, is that we've got a 1 2 1 2 here. Okay. And so this is kind of a bunch of mess in here, but basically maybe it looks like it's a 1 2 and then 3 4 and then 5 here. Let me see. Yeah. Because then this right here would be like a 1 2 1 2 3 4 5 3 4. So maybe it stops a little bit lower here, and then you get a 5. It's a really nasty count. You have to get in like really small time frame if you want to try and come up with something that makes any sense. But for now, looking at this as potentially being what it is here, this would give us WXY or an ABC right here. The B or the X is that triangle. So what are we looking for? We're looking for a rally higher that breaks out above 28, 380 and 98 cents here on Coinbase. If we can get that, that suggests wave 501 is in progress toward a minimum expected target of 29,680. So that's kind of what I'm looking at, right? Let me see here. Let's see. Let me kind of catch up with you guys here. Hank says, if we can do 1,085 days, we can drop 20,000 in 5 days. Yeah. Now, many of you guys probably don't understand my argument with the weekly, but just trading pivots for so long, right? You learn that price usually works in a certain way. And so if we can get that impulsive breakout and rally there on the weekly above the pivot, and then especially if we test it and we don't drop right there below it, usually that has a rally up to the R1 pivot minimum. I mean, that's just, me doing this I've been trading pivots since 2008, 2007, right around there. So that's 10, 13, 16, almost 16 years, 15 years of me using them that comes up with that. So, I mean, it's just what I've noticed over that time frame, guys. So that's what we're going to look for here. If we do happen to break down, obviously, below wave 2 here, it could suggest that wave 2 is still in progress. As you can see here, do this, right? And so we actually have right below the weekly pivot right now is the hourly pivot. This will change obviously at the end of the day on Sunday, but that 50%, 68% right around that weekly pivot or that hourly pivot. So if we were to lose wave two here, that's my first initial, my initial target. And then I'm looking around what would be the 78.6 retracement, which is 25,000 right there. 25,000 the one that everybody's looking for. So, again, if we did, that's how we get. And in terms of this being potentially a 1-2, 78.6 retracement. So solid, right? Let's see here. Let me kind of catch up to you guys here. Multi-more coins. What's going on? What are you saying here? But your 24-hour was not nice and the Stoke was high. Oh, yeah, but the Stoke, again, guys, don't get, oh, you said Stoke was high. Yeah. Again, don't, the stochastic RSI, guys, or even if you just use the stochastic, right? If we were just to jump up here and throw on the stochastic itself, which is not a derivative, right, of what's it called here? Stoch RSI, right? It can stay overbought. Look, guys, look at this. This was overbought from the 5th of January, basically until the 30th of January. That's almost a month. You can stay overbought for a month or, longer. It just is what it is, right? All it tells you is that you have strength in your trend. I think a lot of people look at these and go, oh, well, the trend's going to end. Well, really what your RSI, what these oscillators are telling you when you get to those whether it's a 70 or an 80 level, right? What they're just telling you is that the strength of your trend is very, very strong. That's all it's telling you. Now, it might or might not pull back at that point. Strength in that trend can continue pushing it up, which keeps you sideways for a while, right? So especially on the larger time frames, guys, don't get so concerned about it, stochastic or stochastic RSI being oversold or overbought for a long period of time and thinking it has to return, to the other side. It doesn't. Okay. But again, if we check here to the 12-hour, Hank stochastic here is right about mid-range. So I guess Hank would argue that maybe, I don't know if Hank would argue it, but maybe that we'd have to see a drop down into the low here. Or maybe he would argue that if it drops down into oversold and then crosses, bullishly there, then that would be the signal. So, but yeah. What do you want to set to 14.3 and 3? You talking about your stochastic here? Instead of the smoothing, you want 3 on smoothing? Like that? You know, like all those little crickety cricks? Yeah, okay. Yeah, I did that. Okay, so there we got that on there. But yeah, so I mean, again, depending whatever you're using for it is what it is. Nonetheless, 4-hour, we're kind of here. Just now on the bearish side of neutral. RSI is on the bullish side of neutral still. But again, 4-hour getting close down there, right? To resetting. 1 hour has popped up. Might it or might it not cross here? Again, could pull back, but could continue up. RSI isn't doing us any favors either, just on the bearish side of neutral. So I mean, we've still got this going. So it's just sideways, right? You get consolidation, you've got consolidation, you've got consolidation. This is one big, large consolidation here. But traders tend to get very, very stressed out when we've got consolidation for any extended period of time. They fear they're going to miss something happening. They get bored. Again, guys, I teach traders every day, right? And the biggest commonality amongst traders, same issue I had when I first started, was that we expect to be able to get in and get out that day and make a butt ton of money and just do it over and over and over again. But that isn't really how trading works, right? You're looking for setups. You're not just looking for any setup. If you're smart, you're looking for the higher confidence trades. Those are trades where you have some confluence of factors that suggest that what you're thinking is going to happen is more likely to happen. Maybe you think you're looking for a rally up and you're doing it on support, right? And maybe you print, in this case it didn't, but maybe you print a bullish divergence at that low as well. There's a multiple things going on there to say, okay, well, it's a higher confidence trade, right? other than, well, it just dipped below oversold. It just dipped into oversold, so we should be bouncing and going higher, right? But again, that isn't how it always works, right? Look at this. Dip down into oversold way over here. Way over here, guys. And so we went from, early, the morning of March 9th there, all the way oversold. We didn't break out until Friday, March 10th in the morning. On the hour chart, we kept dipping lower and lower and lower. Now, eventually it printed bullish divergence. But see, if you just went in, right, when it dipped down in there, you might not be okay with that, right? Actually, yeah, so we got this here, right? So you got it in. If you bought, it's going down below you, right? But here, if you're waiting for that bullish divergence to play out here, potentially, now there's a higher confidence chance that you're going to be right. So, yeah. Oh, yeah, Do Kwon, I forgot about that. Do Kwon got arrested, guys. Montenegro, right? I believe so. And he had what? He had fake passport and stuff on him, fake papers on him. But remember, it was just a few months back. He's like, we're not hiding from anybody. We're in full cooperation with everybody. And then the U.S. comes down with a hammer. Boom, we're going to charge you with crimes now, too. So not only is he worried about South Korea, but he's also got the U.S. on his rear end now with that. So, yeah. Good times, right? Michael Johnson, what's up? You said you've been trading Fibbo system, and it's showing me that I need patience on the higher time frames. Yeah. One of the biggest things, guys, patience. It's hard to be a trader and be impatient. You're really going to lose a lot in that. Let me see here. So we've got that DXY. What's going on with the DXY, guys? So I'm starting out here with the weekly. So again, we had these two big rejections in the weekly, right? We had this first one here back on the week of January 2nd. And then we had this one here on the week of March 6th, right? Sent us back down. Now we've caught support right here at support. I mean, again, guys, look at this. See how you got that resistance there? Resistance there. So that's where we caught out that drop. This one now has found support right here, right? Again, you see how we only wicked above it? This candle spread's held in check. And then over here, found support, wicks down, basically found support, rallied up. We're going to come back here. So if I look at this, again, really kind of a nasty kind of count. I've got a count that suggests we're probably coming down here to the S1 pivot. But if we were to break out higher here, to me, that would say this is wave one. And then this is maybe an A, B, C up toward this 107.6 kind of area. And that would give us a 50% retracement there. That's where I would look for the rejection. Again, you do have all this resistance and support all right in here, right? You have this sideways, you have this sideways, you have this sideways, all in the same area. So generally would expect to get resistance there and then head down lower. If, however, we do roll over and continue to break down, then we are still looking down here toward that S1 pivot minimally, which gets us around 93.815. So right now my count says basically 1, 2, 1, 2 here. Okay. So this would be a 3 of a 3, third of a third on the breakdown. Now remember, we're getting caught right here. This is support at the 100 level. It's a very psychological level, very strong support level. So you're going to need a lot of selling in there. So if the 1, 2, 1, 2 is correct, right? 1, 2, 1, 2 here, then to get wave 3 of 3 breaking down through that 100 there makes a lot of sense. You got all that, everybody kind of going in on the short on that. So yeah, that's what I want to see here. Andrew, you're asking me if I went over the DXY? That's what I'm doing right here. You might have asked that before I got started on this. I don't remember. I didn't see it. But anyway, yeah. So, again, looking for that further drop if we can get that breakdown here. If we do happen to break out higher, we'll just look for a rally up to that 107.6 kind of area. And then we'll look for rejection. And if we get that, right? If we get that, then we're looking for a breakdown below this swing low, 101.915, because that would be an A, B, C, right? We'd break down. But for now, we'll see if this weekly pivot holds as resistance and we fall on further. That was delayed. Andrew said, okay, yeah, that's what I thought, man. Again, Dow Jones, still looking at this, again, here as a 1, 2, 3, 4, 5 is an A, a B, 1, 2, 3, 4, 5 is a C. This right here. So it seems like the easiest way to count this is A, B, C, right? But I was looking at this and I'm like, okay, so my thought was maybe this is a 1, 2, 1, 2. Okay. That was my thought on that. And so now we've got this this pullback that's pretty deep, right? So I start looking at it and I'm looking at going, I wonder if this isn't a leading diagonal here, if this isn't like a 1, 2, 3, 4, 5. And it may be. It may be. Let me see here. Well, no, see, this still kind of gets you there. I don't know. You go ABC is 1, 2, ABC is 3, 4, ABC is 5. Leading diagonal, right? And you go 1, 2, 3, 4, 5. So again, if you break down below this swing low here, wave B, which is 13,230 and 5 cents here on the Dow. Future. Oh wait, this is Dow Jones Transports. My bad, guys. Sorry about that. Let me add the other one in here. My bad. Glad I just saw that. Why didn't anybody tell me? You guys are awful. You should be telling me what's going on. I can't keep up. Let me add all these here. Let's try one more time here, guys. All right. Oh, lordy. Okay, so basically, again, still looking at the same idea, right? Still in a B, in a C here. Okay. Now this here. Now what's going on here? Okay, so now we go in and we go. We've got yeah, this is low here. So 1, 2, 3, 4, 1, 2, 3, 4, 5, 5, right? Or 5 here, right? So that gets us 5, and then we have this movement. Now this looks like A, and then A, B, C is B, right? Got to make sure it's the highest there. Swing high up there is 34, 34, and 32. 34, 33, 4 there. Yeah, okay. So there's your swing high right there, it looks like. 42, 34, 3. Yeah, okay. Yeah, it's $10 less there. All right. So again, the idea would be 1, 2, 1, 2, 3, 4, 5, 3, 4, 1, 2, 3, 4, 1, 2, 3, 4. That'd have to be a 5 on that though. Yeah, let's see how that works out with here. Let's put some stuff in here. So we've got the higher high here. So this suggests if this is not going to be a top, it suggests a flat, right? So ABC. I mean, you could actually have a triangle in there. 2, 1, 2, 3, 5, 1, 2. Actually, this may be ABC 1, 2, ABC 3, 4, ABC is 5. Yeah, there we go. Ending diagonal on that. Something like this. There'd be something going on there. All right. So now you have your A, and potentially you have your B here, or let me see here. Can we do a triangle here real quick? We can go A, B, C, D, maybe E, something like that. Yeah, maybe something like that. And then you have 1, 2, 3, 4, 5. I mean, so yeah, there you go. Okay. So if I'm looking at the Dow here, I mean, to me, this looks, it took a little bit there, but hadn't looked at this full count in a while. I mean, to me, it looks like 1, 2, right? And then this right here just looks like 1, 2, 3, 4, 5. So like a leading diagonal. And you have the sharp drop off there, which suggests that's probably what it is. So overall, this pullback here, wave 2, gave us just beyond 50%. That's solid. This pullback right here, looks like 70.5%. Again, another solid, right? A, B, C here potentially. So, I mean, to me, it looks like we're probably going to have a rally up higher there, right? I mean, if we're looking at this, again, ABC coming down. Looks like we've got 1. We got an ABC back for 2. 50% retracement. Locally, you done a smaller time frame here. Again, looks like 1, 2, 3, 4, 5 here. And then A, B, C, or WXY coming out of that, right? Yeah. 1, 2, 3, 4, 5. 1, 2, 3, 4. Is it maybe a triangle here? 5. And then 1, 2, 3, 4, 5, right? So, I mean, there you go. Minimally, you should expect, if that's 5 up, minimally, you should expect, a breakout higher, at least one more higher, right? A, B, C, if you're going to do it. But I think the count looks pretty good coming down as a 2 there. So, yeah. That's kind of what I'm looking at there. For me, the big thing that most people don't seem to be catching on to is the idea that we broke out above this right here, right? So these are 3 waves down. Break out above it. That's locked in. This wave C can't, come down any lower, right? Now, again, there's all different ways this could play out, depending on if this would be a wave 2 or a wave 4. You can get a triangle. You can get a flat, over from the all-time high, right? So, this could be A, B, C down, and this could actually be an A, a B, and a C up toward that all-time high. And that gives you an A, that gives you a B, and then you have 5 waves back down toward the low here to create a flat. That could take the rest of the year, right? You could be doing a triangle. If this is wave 3 and this is wave 4 here, if wave 3 is the all-time high, well, now all of a sudden you have A, B, you can have C, D, E before you break out. Again, could take potentially even the rest of the year, right? Or a good portion of it. Or it could be exactly as it says here, and ABC is done, and this is 1, 2 on the way up. By the way, the other ways, I mean, you can have a WXY. So WXY, ABCs are 5 waves, 5 waves for A, 3 waves for B, and 5 waves for C. A WXY, those are 3-wave interior structures. So it's ABC or WXY to get W, ABC or WXY to get X, and then ABC or WXY to get Y, right? So again, this could be ABC as a W here, and then AB could work up here, C as an X, then ABC is Y. Or let's talk about even more, guys. This could be ABC down as a W, and we could build a triangle for X. So we'd have to go ABC up as A, and then B, and then C, and then D, and then E for X, and then we'd have an ABC down for Y, right? I mean, so there's a lot of different ways that corrections could go. And this is why people lose money, guys. This is why retail traders tend to lose money. It's easy. It's easy to, to pick a trend like this, right? That's so, significant is going and to get in on it. But then usually traders lose all their money and more in the correction because they're trying to trade it all around. They don't know what's going on. So yeah, there's a lot of potential things on there, right? Let's see here. Kind of catch up with you guys. What is that? Eric was saying that Jim Cramer said on CNBC that Deutsche Bank is fine. Oh, he's had such a terrible record here lately, especially with the banks, right? I mean, it's not been going well for him. Not just with that, obviously. Crypto. Every time it pops up, he says, "Oh, you need to sell it all now," and then it goes up higher, right? Let's see here. Can we look at ocean? Yeah, I mean, if you live near the if you live near the beach, you can look right out there and see the ocean. Yeah. Oh, you mean the oh, okay. You mean the crypto. I'm just messing with you. Let me see here. Ocean USDT. What do we got here? I assume you're wanting USDT, right? If I'm looking at this, yeah, okay, this has been a while since I looked at this one. That did not play out. Let's see here. 1, 2. Let me see here. So you get 1, 2, 1, 2, 3, 4, 5. What do you give us? 3, 4 here potentially. And then 1, 2, 3, 4, 5 gives us 5. Pullback right now is right there, almost 70.5. That's a pretty good pullback. Looks like we've got a flat correction here. So ABC down, ABC up. So we're looking for 5 waves down then for C. Okay. And then we've got, again, looking for 5 waves down. Let's see here. Potentially a 1, 2, 3, 4, 5, maybe in the form of an ending diagonal. And then, I mean, maybe it's a 1, 2, 3, 4, 5, and then an ABC here. Yeah, that's what it looks like. So it looks like 1, 2, 1, 2, 3, 4, 5, 3, 4, 5, A, B, 1, 2, 3, 4. Finishing a 5 here. 1 hour is about to get oversold on all that. Right here at the S1 pivot on the hourly. So yeah, I potentially see this as a 1, 2 off there, heading up. So if we can get that, then locally anyway, looking at a 1, 2 from around this area, which gives us a 3 at 0.4128, and a 5 up near the top minimum expected at 42.83, 0.4283. Wave 3 could overextend and head up higher there, as it does. But yeah, it looks like could possibly have a 1, 2 done off that recent low from back here this is March here. So 1, 2 on that. Right there. And so, of course, being 1 up here, right? So wave 1 up off this November 22 low. So there's 1, potentially 2, and then 1, 2, potentially again. So we just need the breakouts higher, right? Let me see here. Any thoughts on the Riot breakout versus coin? Maybe think it's Riles less versus coin. Well, I mean, my first thought, I hadn't noticed that yet. I hadn't looked at those charts today, but yeah, I mean, you're going to see coin taking a hit because the SEC says, "Oh, we're going to sue you guys," right? So yeah, I mean, at the end of the day, yes, they all generally react how Bitcoin reacts, but then they're also still stocks, right? So there are other things that weigh on them rather than just the price of Bitcoin, right? And so in this case, one of those externalities for Coinbase is the SEC thing, right? So that's something I'd watch on that. Sure. That would be my thoughts on that. Let me see here. Chris pulling out the dad jokes. I'm not sure that I know what you're talking about. Dad jokes, me? Never. um, Big Vape, what are you saying there, man? Let's see here. See here, you said any, what? Oh, Kramer on NVIDIA and Meta was epic bottom calls, cried about Ocean, and called him NVIDIA a loser. Yeah, it happens. I mean, God, man, it's a lot of really, unfortunately, terrible calls lately. But I mean, it is what it is, right? We all start cringing if he says something bad about crypto, or we says something good about crypto, right? Oh, he cried about Meta. Okay, yeah, both up 100% since. Yeah, sure. Let me see here. Oh, not sure if this was his question, but Riot is down 9%, whereas Coin is up 1%. Coin doesn't seem to be reacting badly as he's new. Didn't it yesterday though? Let me pull up a coin chart here, guys. If I remember, I think I saw it yesterday. They had it there, right? Yeah, the news was yesterday. See that big gap down there? Yeah. And then if we look, of course, at Riot here, we can just toss it on here, compare it. Get that done. Okay, there we go. So yeah, so if you're going to look at Riot versus it here, right? So there's the idea. Yeah, you see how they were both at this point over here, and then Riot popped up higher, and then Coinbase dropped. Yeah, so I think the Coinbase's knee-jerk reaction to the SEC thing. The overall, I mean, Hank. Okay, so Hank says that the SEC case could be great for Coin, because if it is decided to stake in his interest and not dividend, their business will explode. I think overall, all these SEC cases are good for crypto overall, because they're going to force interpretation. They're going to force guidelines. They're going to force some kind of something that companies can actually look to and go, okay, if I want to create a product, here's the goalposts. Here are the boundaries. Here's what I can do. Here's how I can do it. So yeah, I think it's definitely, I think the same thing, guys, that I talked about in that 2018 bear market, when I talked about this next time coming up, and I said, these institutions are really going to start coming in when there's clarity, when there's regulation clarity, right? It's hard to put money into it, especially with these institutions, a lot of them, because they have, certain laws and rules that they have to follow. And if you don't have clarity, regulatory clarity, you could be found to be breaking those fiduciary duties or whatever else that you may have, different laws, by putting money into it, right? So yeah. Emersoft, what's going on, man? Awesome analysis and content. Looking forward to your podcast with Gary Cardone. Yeah. If you guys haven't heard, it looks like I'm probably going to get, Fibaswani was the first person I had on here, and I've had him a few times. And of course, he'll be on every Friday, guys. He has a family thing today, so that's why he's not on today, but we'll have him back probably in another week or two or something like that. But we're going to set up something with Gary Cardone, bring him on, talk about bigger macro issues, I guess, and stuff like that. So I'm excited about that. So this should be a lot of fun. So yeah, hopefully you guys will tune in for that. Definitely tune in for it, man. For those of you that don't know, Gary Cardone is Grant Cardone's twin brother. So if you don't know who Gary Cardone is, you might know who Grant is. Grant's real big real estate, whatnot. Gary, from what I understand, is really big into crypto. So even if you don't necessarily, you have your own opinions about Grant, which, everybody does. It is what it is. He's very out there. It's what he does. It's his business, right? Don't hold that against Gary if you don't necessarily like Grant a whole lot, because he is. Yeah, like Emerson's saying here, Gary Cardone, what do you say there? Gary Cardone is focused on Bitcoin and crypto. So yeah. So it's kind of funny, twin brothers, and Grant's like, man, I wouldn't touch that stuff with a 100-foot pole kind of thing, right? And Gary's like, man, give me it. Yeah. So Pretty great stuff. You were about to ask Eric if there was a relationship. Yeah. There's a relationship there. So, but I'm excited about it. I've seen Gary a few times on some things more recently, and so I'm not sure that my interviewing chops are up to it, but hopefully he'll roll with me, and we'll get through this, and give you guys a lot of things to think about, a lot of good information. Um, guys, again, I need you to understand. Nobody knows what's going to happen with anything, right? With anything, even me. I don't, right? I get pretty good, we get pretty close a lot of times, but I could never guarantee you that the things I tell you here about what I think the market's going to do is actually what it will do. All right. I can't do that. It's nuts. I don't have a crystal ball, right? Nobody does. But what we can talk to you about when you get people who have certain bits of experience on there, you can listen to their reasoning, listen to the things they're pointing out to hopefully, maybe help you ground a bit and to get you to understand deeper. I mean, the best thing I think that's happened because of Bitcoin is people are talking more about things like sound money and macroeconomics, even if most of them still really don't understand it a whole lot. At least they're talking about it, right? Global financial interconnectivity, stuff like that, global finance, right? So to me, the best thing about Bitcoin, honestly, guys, has been that there's more of y'all out there talking about it, about these things that are important, that people have become so lackadaisical about over the decades, right? And so, a lot of people don't want to do it because a lot of times it's hard thinking. You have to really kind of put some effort into that thought. And you have to make sure that you're going out there and finding out what's really true and what's not, right? Not, so much of what you guys see out there isn't true. Even more of it is half true. But if you don't know, when you look at it, you don't know. You don't know what you don't know, right? So yeah. So anyway, we'll see how that all goes. Hopefully it'll be a great time. I really hope so. So let me come up here, guys. Hank is saying that Ethereum is looking not so great. What we got with Ethereum here? Let me see. Where's my Ethereum? Is that the one? All right. So this was an account we had from a while ago. Obviously, it's quite a while ago. Q just barely, what? When was this from? We've got this all over here. Yeah, that got me from back there. I think it was like, geez, where's the rename? There it is. God, I can't get used to this. So this is from back in October. It seems, or a little bit after. Looks like November at least here. Yeah, we were going up here for the fourth target. We got 4, 5. Didn't do that. What do we have going on here? By the way, notice this is just off this. This is actually a 1, 2 right here, right? So I mean this 1, 2, because remember, Ethereum didn't make a new low here in November like Bitcoin did, right? And remember, Bitcoin spot made a new low, but Bitcoin futures did not make a new low. So, depending on what chart you're looking at, your count's going to be a little bit different, at least with Bitcoin, right? Looking through all that. But man, oh man, what do we got here? Immediate? Oh, geez. We'll just throw this on cycle right here, see what we get. Okay. 1, 2, 3, 4, 5. A, B, 1, 2, 3, 4, 5. Okay, so we just had a flat correction here. So 3. ABC is 4. And then we got, oh, wait a minute. Maybe not. Let me see here. No, it looks like 1, 2, ABC. Yeah, we'll just go with this at the moment. Looks like maybe 3, 4 there. Let's see, where does that pull us back to on that pullback? Okay, so that's going to be that. All right, so it's going to be all the way off here. So that wouldn't be, oh yeah, it would. Okay, that's 3 right there. God dog it. So figure where I'm at on here. So what happens if you don't look at a chart for a while? Okay, so it looks like It's 3 and 4 there with a 50% pullback. And they have beautiful pin bar candle. There's no reason you shouldn't have been buying that. Man, with this big pullback, and then you're getting this on support basically, right? Coming right here. See how this is support right there? Support resistance all through here. Man, you should have been buying. After this printed, you should have been long, at least toward the swing high up here on that. So then we got 1, 2. I mean, this could be 1, 2, 3, 4, 5, which is the alternate count there for Bitcoin, right? Or it could be 1, 2, and then 1, maybe some sort of flat here too. Hank's saying short term is what he's looking at. Let's jump in sooner here then. Let me see. What do you got here, Hank? There's the link if anybody wants to grab that, I guess. I couldn't just... let me grab on the other one here. I got to figure out how this whole thing works now. I don't like that, Hank. A triangle? A triangle doesn't fit with an LA wave count. You won't have a triangle at the bottom of it, but it would be a 1, 2, 1, 2 potentially. Let me kind of pull it up here for you guys. Let me see if I can find it on here. All right, and let's see. Is it... what are we looking here? Trading View? And let's see, is it that one? Nope. I can't even find where it's looking here. You know what? We're just going to go back to the other one here. Let's see. To the other chart, and we're just going to go ahead and jump on that. Come on, allow. Yes. You see something now. Yeah, I'm talking to you guys. I know. I know you didn't see anything. I was looking for it. You guys got to pay attention. I told you I was looking for it. I just happened to mention the triangle because I saw it as I was looking for it. But yeah. If you think there's a triangle, something like this, then Elliott wave would be a 1, 2, 1, 2. So we see your face. Yeah, I know. It's a great face, right? You should be excited to see that. Come on now. Anyway, yeah. So I mean, you can get a pattern, a barrier triangle kind of pattern, right? But what you're looking for in that case would be a 1, 2, 1, 2 more likely. I get real sketchy when we do like a 1, 2, 1, 2, 1, 2. Usually I kind of limit there at just 2, just a 1, 2, 1, 2. But yeah, I mean, yeah, you can get a 1, 2 here and then a 1, 2 back here toward that 1365 level. Sure. And then maybe even 1 up to the resistance one more time as, subwave 1. So you have 1, 2, 1, 2, and then subwave 1 and subwave 2 of 1, 2, 3 of the larger 1, 2, 3. But you know what that means, guys? When you have this kind of consolidation, this means you expect a strong move up because it's going to be an overextended third wave here off the first one, 1, 2, 3. It's overextended. And so you see a lot of these candles here. There's a lot of inefficiency right here. Should be easy move up through it, through toward 3,000. Once you break out above that kind of 1,900 and change area there, it's kind of holding it back as resistance there. Sure. My webcam's just fine. Man, Hank, you worry about things too much about things you ain't got to worry about. But anyway, yeah. So I mean, as far as like a classical pattern type thing, yeah, classical charting pattern, you could potentially see this. Sure. Now dragging this out all the way to almost 2024, I don't know that I necessarily see that happening. I can't say it can't happen, but it seems less likely to happen than to happen. But we'll see. We'll see how long it takes to do it. What I would be looking at, if you're looking at this, I wouldn't even look at the last. I'd probably just look at a 1, 2, 1, 2 because that's mostly what we get. And then we'd look for the breakout there. So yeah. Hank says, I would like it to break with conviction. Well, that's the idea, right? This is 1080p, guys, high definition. I don't know what you guys are having issues with. But I am recording in 1080 always. So yeah. But yeah, I mean, I like the idea that we kind of test up there and pull back. We'll see what happens here. Now, again, this is just Hank's thought here. We could take off right here. We could take off. If Bitcoin was to do that, what I talked about popping up and rallying up to 30 or 35, I mean, we're going to see Ethereum going with it. So yeah. No, it isn't. Not your webcam. Sure it is. Let me see here. But anyway, let's get back over here to the important stuff. So again, looking at Bitcoin here, we are pulling back. Again, you know what I'm looking for if it's breaking down there further. But if it does break up, above this swing high right here at 28,299 and 99 cents, seems like we've been there before. Not quite. Okay. Anyway, if we break out above that, that would suggest, again, that we're rallying up because we're trying to get above again that 28,380 kind of area, that wave B triangle resistance, or wave B. Got A down and then B as a triangle and then C down here. So yeah, 28,330 kind of area. If we can get above that, I mean, there's no reason to think we shouldn't be looking up here toward 29,680 at least. And that gets us pretty close to 30, guys. Gets us pretty close to 30, right? So yeah. Hasta la vista, Barbie thinks we're going down. No reason given, though, just thinks we're going down. So remember, guys, doesn't do you a whole lot to jump out there and just say, oh, it's jumping down or it's mooning. It doesn't make any sense, right? That doesn't help you. It doesn't help anybody else. You always want to have reasoning for it, right? You want to have something on there. Fundamental reasons, I think, are always a really bad reason to use for which way the charts are going to go. Because, again, these things are already in the chart, right? So if your current interpretation of the fundamentals is not correct, right, the chart's obviously going to the price is going to move differently, right? Because the correct interpretation is already in the chart, right? So yeah. 25, that ain't even that bad. 25K would be okay. But again, guys, my big thing about 25K means we have to violate this weekly pivot. And, just dumping down there. I mean, we could, sure, but everybody's waiting for that. So I think more pain for the market would be a nice thick rally up through that, just a nice impulsive rally up through all this congestion here, up toward that R1 pivot. Scare the hell out of everybody, right? They'll be like, what the hell? We're waiting for down here. Can't get in. Moves too quick, right? See another big candle, right? Big candles. Big candle, right? See another big candle come up. Maybe work on finishing that, a wave one all the way up through this R1 pivot area. And then we get back and then we just retest the pivot. Or if we get closer to 45, we'll just retest this kind of 29 area. So yeah. See here. Is it just me or does Monero tend to be contrarian to the overall crypto market? I find when there is a sea of red, Monero is green and vice versa. Maybe a happenstance observation, but I am curious. I haven't really noticed that, so I don't know, man. I haven't really paid attention to that. So there we go. All right, guys. Well, listen, it's 12:30. I got to get out of here. All right. So anyway, like I said, man, we're going to work on hopefully getting Gary Cardone on here. I think it'll be amazing for you guys. So hopefully you'll tune in on that. I'll let you know when we know a little bit more about that. But as always, guys, the only thing you control in the market is how much you lose. Everybody's so dang sure of themselves. Remember, there's that quote, right, that says the wise, what does it say? The fools are always so sure of themselves, but the wise are always asking questions, right? I don't know. I would just advise you never to be so gosh darn sure about what you think's going on with the markets, right? I never tell you guys this is definitely going to happen. If I'm feeling more toward one way or the other, I'll tell you. But again, we've always got, just in case it does happen, we've always got a plan to the other side, right? Just like we did earlier with Bitcoin. If it does happen to break down, those are the two levels, including 25, right? But if it does break up, then we've got our other targets there, right? So all you have to do is wait for Bitcoin to move. That's all it's got to be, man. That's all it's got to do. Let me see here. Yeah, Emersoft, man, it was great. Yeah, I remember meeting you over there in Vegas. I was telling some people about that. So, yeah, man, great meeting, obviously, especially we get Gary on here. So that'd be a lot of fun. But there you go, guys. It's the end of the week. I hope you all trade safe. Y'all take care. Um, if there's any other piece of advice I can give you about trading, guys, that's just straight across the board, other than the fact that the only thing you control is how much you lose. So risk management is the most important thing you're doing as a trader. Is that don't just take a trade because there's a chance. Most of y'all are out there taking every time it looks like there's a chance you're taking that trade, and you lose a lot on that. Look for the higher confidence trade. Look for a confluence of factors that suggest that trade is more likely to happen than not. It doesn't guarantee it's going to happen, but you're going to have a lot less losses, right? And when you do win, they're usually going to be better wins because you have all that confluence, right? All right, guys. Y'all have a great day. Those of y'all who are in the mentor program, don't forget in about an hour, we're going to have our session via Zoom. So look forward to seeing y'all there. Everybody else in Discord, I'll see you guys there in a bit. And all the rest of y'all, join us, howtotradetowin.com. We'd love to have you there. If not, go ahead and make sure you subscribe to the channel here. Hit the like. What else can you do? You can follow me on Twitter at TXWestCapital, right? Make sure you guys are doing that. And I will be back on Tuesday, 11 a.m. Central Standard Time for more of this. All right? All right, you guys take care.